Tuesday Tips. I'm Mark Fidgett with your #1 source for real mortgage advice. I received an email over the weekend, and the email asked, can I use my car as the down payment to buy a home? Well, you can't use your car, but you can most definitely use the cash from the sale of it. But be prepared to show a paper trail on the sale. So today's video is all about down payment. But before I get going, you already know the name of my company is notapennydown.com. So let me start by saying you don't always necessarily need a down payment. Having said that, where can your down payment come from? Well, you already know that it can come from the sale of your car, but let's talk about the more traditional sources. Let's start with the most common place, your bank account, your checking, your savings. You can use the cash sitting in your account, but remember, because of the money laundering laws, you will be asked for a 90-day history on the account. For example, if you deposited 50 grand last month, you'll need to show a paper trail. Remember, I don't make these rules. In fact, just because money's been in your account for more than 90 days doesn't make it clean, but they seem to think so. Try depositing over 10,000 cash one day to your bank. Every siren in the bank will go off. Anyway, just remember, you'll be asked for a 90-day history regardless. Your down payment can also come from your investments, stocks, bonds, GICs, but make sure they're not locked in or you might not be able to use them. You can also use your RSPs. As a first-time buyer, remember, or also not having owned for the last 5 years, you can withdraw up to $25,000 penalty-free from your RSP. And if you're buying with someone else, you can both withdraw up to $25,000. And it doesn't have to be used for your down payment. You can also use a gift as a down payment, but it has to come from an immediate relative, your mom, dad, sister, grandparents, and they must sign to confirm that it is in fact a gift and not a loan. Now a couple of non-traditional forms of down payment. How about a vendor take-back? A vendor take-back is in essence a second mortgage in favor of the seller. For example, you're buying a place for 100 grand, bank agrees to lend you 90, but you're 10,000 short. Well, the seller agrees to lend you that additional 10,000 that you're short, but it's secured by way of a second mortgage on the property. And then there's a basic second mortgage, which is exactly like that, but it doesn't come from the seller, it comes from someone else. Remember, the banks always don't allow a second mortgage behind their first. Listen, if you have any questions about down payment or any part of the process, it's as easy as 604-273-2002 or on the web at www.notapennydown.com. And remember, it's free. As usual, make it a great day, and I'll talk to you soon.